Welcome to Fintech Frontiers. I'm your host, Stephen Walsh, and you're on the podcast where we explore what's going on at the cutting edge of fintech, one founder at a time. Today, I'm delighted to be joined by Matt Gilbert, who's founder of Synapto. Matt, thanks for joining us on the pod.
Thanks, Stephen. Great to be here, and thanks for having me.
Yeah, it's a pleasure. It's a pleasure. Matt, just to kick things off, I know you've worked around the payments industry, but with companies like WorldPay and NatWest. But can you tell me what was the big problem that you saw in the market that led you to start Synapto?
Yeah, absolutely. So yeah, no, as you say, yeah, that's my background. I spent sort of the last 15 years in fintech and around payments. Primarily from a sort of tech and delivery perspective. I think what I really saw, as part of the journey that I've been on, and especially part of the team that helped NatWest launch their new payments business in the UK, was increasingly merchants are going not so much to legacy traditional payments companies anymore, but they're going to the software platforms that they use to manage and grow their businesses. What we'd call vertical SaaS or ISVs. Everyone seems to have a different name for them. That trend's massive in North America, in sort of the US and so on. 1 in 2 people are now getting their payments through their software rather than through a traditional payments company. And so if you're a software platform, over here, it's not quite 1 in 2 yet. I think numbers vary depending on who you listen to, but 15, 20%, something like that. But increasingly, there is a trend here as well in the UK and in Europe that merchants are turning to software for this. But if you're a software platform, there has really only been sort of one name in embedded payments, right?
On the tip of everyone's tongue.
You've either got the sort of there's a few. It's not just Stripe, but you've got kind of Adyen, Molly, these kind of guys. These what I'd call digital challengers, right?
Yes.
So you've got super embeddable, great UX, really easy to. They're dev first companies.
Yes,
they're founded by developers.
Yeah,
and they brought payments people in as opposed to payments companies that want to go and just build a bit of tech on the side. And
they're attractive from the point of view that I've got my SaaS service and I've got the tracking of usage. And now I want to put in payments infrastructure, and you can just kind of drop the components of code in. You're set up quickly, and there's not a big hassle around that, which can be a tricky area. So they've done very well with that business model. But I think you're looking beyond that. Are you seeing some more specialist kind of problems that aren't fully being handled, or?
Well, there's absolutely. I think there's first of all there's that sort of choice, right? So you either go to one of those kind of companies, or you go to one of the legacy players, one of the big acquirers. Exactly as you say, what the digital guys have done really well is just make that time to market super easy and super fast.
Yes.
So, but there's the cost problem, right? So first of all, if you are an emerging new SaaS company or you're a scale-up SaaS company, it's very tempting to go to a digital player because you can be live in a couple of weeks. You own the UX, it fits in nicely. If you'd have gone to one of the legacy guys, I've spoken to a software platform that took almost 2 years to integrate into software. The opportunity cost is incredible.
Yes.
So you've got this massive choice between, the great UX, the legacy players. Primarily, it's a commercial problem as well, right? Because if you're a software platform, you are bringing lots and lots of merchants, so businesses that are taking payments, you're bringing them to the digital players, but those guys are keeping all of the revenue. So there's a big commercial problem. You're also helping a gateway get rich rather than growing your own margin. But exactly as you say, there are also a lot of problems where, because you've tried to make something very ubiquitous and very kind of one size fits all, regardless of vertical, exactly as you say, there are a bunch of problems that aren't necessarily fixed particularly easy, especially if you go sort of deep in some of the sectors that we're looking at, around medical, around dental, vet, and so on. So
you're finding, you're in that space of using software to enable payments for digital providers, but Are you delving into particular niches and trying to really verticalize your solution that it corresponds very well with the specific needs in particular market niches? Is that
Yeah,
the idea?
broadly, yeah. I mean, as a reasonably new company, we have to be careful that we don't lock ourselves out of opportunities. So
Yes.
there is a level of sort of breadth that everybody needs to take card payments. Everybody needs an embeddable checkout that easily fits into UX, whether that be SaaS, whether that be a
Hmm.
merchant website.
Yes.
These are reusable components that
Yes.
lend themselves pretty much to any vertical. So that there's an element that
Yes.
we can
Yeah.
serve
Understood. Yeah.
kind of any market need. But exactly like you say, the need of and we're particularly focused around sort of vet, dental, clinical,
Excellent.
chiropractic, and so
Right.
on. And so
Yes.
these are things like integration into practice management software. How we work with partners that have got AI tools that are plugging into the telephony systems of these providers and
Yes.
integrating into the patient notes so that they can provide much richer experiences. Phone calls don't get missed, and so on. So
Yeah.
it's not just the tools that we're bringing, but what we're
Right.
trying to produce is a bit of a
Yeah.
one-stop shop,
Yes.
integrating multiple
Yeah.
other value-added partners
Right.
to
Yes.
solve, to be that, the one-stop shop that solves every need for
Yes.
a clinic.
Understood. Yeah. So it's great to get into that niche, and I suppose you're identifying the top 5 or 10 platforms that are turning up in most veterinarians or dental clinics, and then having a solution that's very well suited to those merchants, if you would call them that.
Yes, exactly. We are, working with and growing our kind of portfolio of integrated partners. We, also a lot of the big practice management software that we aren't yet working with do also have open integrations. And what that means is that where we've got a partner who works with a lot of clinics or providers. So, for example, we've got a partner who is a virtual assistant and AI sort of powered business that works with chiropractors, and so we have onboarded their customers, and we're able to integrate now into the practice management software that those merchants use in order to
Yes.
help make bookings and so
Right.
on.
Yes.
But without the cost overhead that come with the traditional Stripe, for example,
All right.
accounts that are
Yes.
being used, for example.
So there's a couple of value propositions there then, that there's that sort of integration into the environment for those niches, but also you're saying that there's a kind of a cost savings or a margin protection element, that you're saying, well, why don't you move from, say, Stripe to Synapto, because you'll be able to protect some of your margin, but also you'll be able to integrate into your practice management and some other systems in here.
Yes, exactly. So, I mean, for our customers, they're saving, the actual merchants are saving between 30 and 40% on their fees, which kind of that translates into
Yes.
thousands of pounds a year, right? So
Phenomenal. Yeah.
it's
Yeah.
quite large. But for the actual platforms that we partner with, they can double and sometimes even treble the take rate that they get. So that's commercially pretty sound. And the
Yes.
key is there's no degradation of user experience. They have all of the benefits that they're used to,
Yes.
and they're live
Great.
in days and weeks instead of months and years, as I say.
Yeah.
Uh,
Excellent.
so
So you can
yeah,
get in quickly as well, so that there,
well, and that point, if we're going to go and compete with the digital players, you've got to have a service that is just as easy to integrate with and
yes.
very straightforward to switch as well.
Yeah. Well, that's
Across.
a good insight. And look, just to ask, is buy now pay later a thing in your target niche?
Yes, it is. We've actually got a partner based in Ireland that's. And I think buy now, pay later is obviously there's a lot of value in that. The
Yes.
partner that we work with is a consumer finance partner, so it's
Excellent.
not
Yes.
quite the sort of the fast fashion
Yeah.
small amounts. This is
Yes.
about, because in the sectors that we're working with,
Yeah.
these tend to be, oh goodness, my cat needs an operation. oh God, I've
Yeah.
crashed my car. I can't, I haven't got the
So
cash
it's
flow
a
and all
few
this.
hundred, if not a few thousand.
Yes, exactly. We're not
Yeah.
talking about, splitting the bill for a pair of jeans. This is sort of like, bigger values. They do
Yes.
have a buy now, pay later proposition, but they also
Yeah.
have, ethical and flexible sort of longer term finance as well. And we find that what's really interesting is that, you can, on one side of the fence, help a consumer, for
Yes.
example, who's got an unexpected vet bill.
Yeah.
And then for that vet practice, especially an independent vet practice,
Yeah.
they're sitting there and they've, for example, that customer might not be insured. So they're helping that customer foot that bill that's unexpected that they haven't got the cash for at the moment.
Yes.
But for example, if another customer is insured, that vet then sends off the paperwork for that amount of money, but they have a delay in waiting for that payment to come from the insurer. And so we
Right.
also have
Okay. Yes.
lending
Yes.
as well. So
Yeah.
we're
So
able
that's
to,
kind of a bridging finance while you're waiting for the claim to process.
exactly. And so at the moment, it is slightly manual, but
Yes.
in the next couple of months, that will be fully orchestrated. So in our
Excellent.
platform, you
Yeah.
can raise an invoice. You can
Yes.
raise that invoice using Synapto, send that to another business for payment, so insurance company or any other limited company,
Yeah.
and then also then borrow the value of that invoice at to give you that cash flow that you need the same
Yes.
day,
Yeah.
rather than having to wait. So it's sort of trying to solve both the consumer problem from a choice
Yes.
point of view, solve the merchant problem, all
Yeah.
in a
Oh
single.
yeah. No, I get that, and in fact, we in Keeper Solutions have done an awful lot of work with called Pointed Need Lending in the US with a company called Moment out of Atlanta, but it's actually in the kind of home improvement sector, or there's some medical as well, but that it does help the merchant because they can complete the sale, but it helps the
Mhm.
consumer because they can get an appropriate form of finance apart from using their credit card at a time when they need it. So it can be, it can be where you have these kind of win-win-win situations. Then it can start to, it can start to make sense to a lot of people, and then that can become very popular, or it can be it can help your value proposition propel forward to scale, I suppose.
No, absolutely. And it's not just exactly as you say, it's not just about giving your customers more choice about ways to pay, but exactly
Yes.
you're kind of inferring there, you know, you are helping them out of a often difficult situation, especially in some of the niches and verticals
Yeah.
that we're working in, right, around
Yeah.
medical and so on. These are points of interaction which carry quite significant emotional sort of significance for a customer or patient in this case.
Yes.
And so being able to give them a better experience or less traumatic experience is
Yes.
something that really is valuable for your customers and
Yes.
really
No,
does boost their
absolutely.
stickiness.
So there's an embedded finance element here with payments, but also lending
Yes, so,
effectively. Yeah.
so we're not a lender ourselves, but
Yeah. You
we
facilitate it.
we facilitate that
Yeah.
flow into lenders, and again that helps the customer, as in the merchant. The consumer finance angle helps the actual consumer, and it also helps the SaaS platform in the middle because it becomes another revenue stream for them as well.
Yeah. Yeah. Well, it's additional or value added services, creating additional revenue streams. Great stuff. All right, Matt. That's super interesting. And I'd be interested now just to kind of understand where you are in this journey in terms of in terms of the getting into the market and getting kind of customers and revenue, but also with the product and where that's at.
Yeah.
So could you give me some insights into that journey?
Yes, absolutely. So I think, as I've kind of alluded to, the sort of folks that we are looking to kind of compete with, and when I say compete with, I'm not under any illusions that you could, we're not aiming to go out and try and be the next, 100 billion market cap, massive, mega player.
Yes.
That would be nice, but I think we can make a massive difference and become a very successful company.
Yeah.
By being very be reasonably specialized. Uh,
Yes.
so we are looking at that kind of gap that's being left open by the commercial problem by being overly generic.
So you're from London. So is it a case of mind the gap?
Yeah, well, yes, that's well put. But no, so we because of those problems, we realized very very quickly
Yes.
that it wasn't going to be enough to try and just assemble any old team and any old kind of low quality tech organization.
Yes.
So the first part of the journey, spent a lot of time last year trying
Yep.
to find the best co-founder that I could as a CTO, and put together a
Excellent.
very small but
Yes.
very very effective team.
Excellent.
And then we have been building that platform for the 6-9 months from the end of last year into this. So
Great.
we went live in the middle of the year.
Yep.
And we've boarded our first partner platforms onto it. We're
Yes.
scaling their merchant betas across,
Yep.
and we are in a very fortunate position that we have more SaaS platform partners ready,
Yeah.
starting the integration at the moment, and some that are waiting for some of the features that are being released in the next couple of months.
Yes.
So one of the really exciting
Great.
kind of door opening things that we've got is around our payouts functionality. So this is the ability to take a payment, one payment coming from in this case clinical setting, where a platform is connected with multiple temporary workers, and then that single payment is split out into the shifts worked with fee deductions and so on. So that kind of complicated
Yes.
payment out, and in that situation, we're saving over 50% versus the fees of their current sort of provider, because whilst there's a sort of 1.45% plus 20p sort of fee for the actual transaction flows, if you want to raise an invoice in the
Yeah.
system, that's another 0.5%. If you want to raise put VAT on that, it's another
Yes.
0.5%.
Yeah.
Suddenly you're up to between 5 and 7% to support these transaction flows, which is we think that's there's a lot of hidden guff kind of costs in there, which
Yeah. The headline sounds good, but once you're a few months into it and you're looking at your bills, you're going, maybe you're saying this is business not as profitable as I thought. What's going on?
it's the margins get pretty
Margins.
that's the big point, is that those scaling up companies where
Yeah.
everyone's under pressure to kind of grow their take rate in payments.
Yeah.
If you're a SaaS company, I mean, I think it was is it possibly Toast in the States, they grew their overall revenues for SaaS, and I haven't got the stat to hand, but
No.
obviously they went from a play where it was all SaaS fees,
Mm-hmm.
with a referral partnership, to now a fully embedded pay. I think they're a PayFac now,
Right.
and they grew their take rate up to something like by to be about 70% of their overall company revenues, for example. So payments becomes
Right.
hugely.
So they revolutionized their profitability as an organization.
Well, that's it. SaaS companies are becoming payments companies.
Yeah.
And so you don't start out your journey there often if you're a software platform, but that's a great place to end up. And so we're there to sort of help them on that journey. So when you've graduated to become from a startup to a scale up SaaS platform, and you're realizing that your current partner is eating your lunch, we're there to help. So to your point about where we're going, so we've got our first platforms on. Next year is all about scaling. Having this payouts proposition really opens up a lot of markets to us. But really, I talked about why we formed Synapto, which was all about, okay, we've seen this choice between hugely expensive digital players and kind of clunky, slow incumbents that disrupt your user flow and so on. But actually, and there's obviously a lot of hype around AI. There's seemingly some division about, some people, especially in the payments world, have different views on how disruptive it's going to be. I think it's going to be hugely disruptive. Even within Synapto, we are saving hundreds of thousands of pounds a year
Yes.
with AI internally, lots of things.
Yes.
But I think what's really interesting is if you are a SaaS platform who is using one of these sort of digital players, and they are all investing heavily in this space, building their model context protocol layers. They're driving the market that way. And if you own multiple percentage points of global GDP, as some of these guys do, you can push the market in that direction. So it's happening. It's happening now.
Yeah.
Company. And if you think about, there are lots of different types of SaaS companies, but a lot of the value of what a lot of SaaS companies do is derived around things like bookings, communications with customers, and improving those things. Now, if you imagine a world where, you've got something like Gemini instead of just the regular Google search, and you're a consumer and you want to book a restaurant. Today, a lot of SaaS companies have made that experience through traditional search engines really nicely optimized, and the whole sort of follow up and kind of communication management around that, making sure boosting attendance, avoiding that's the value that the SaaS is providing.
Yes. Yeah.
But in a world where
Agents.
your agent can just talk straight to the MCP layer of a payments company, you're going to disintermediate so much of that value flow.
Yes.
And I think a lot of the SaaS platforms who are partnered with these digital players who are investing here and are funding that investment through the customers that they are bringing to these payments companies, what we're realizing is that in a few years' time, a lot of these guys are going to just be completely disintermediated.
Yes, and that's an interesting point. We see that there's these SaaS products that they might have. There might be a onboarding process that could be form-based, or another one conversationally based. And there seems to be a migration away from the classic SaaS towards a more sort of conversational or GenAI type of interface. So I get what you're saying, where some of the payments companies may be disintermediating some of the SaaS capability through what they're offering. But in general, is the move towards GenAI, is it a nail in the coffin for SaaS in its own right? In that, are you going to need different sites or different apps to do different things? Or is this a different conversation, or you think it's the same one from different angles?
No, I think there's an opportunity here. And I think there will be a lot of companies who don't respond fast enough. That will be a massive problem for a lot of SaaS platforms.
Yes.
But I think clearly there are lots of high value use cases. And I think what Synapto's vision in this is rather than let the SaaS platforms be disintermediated, we are investing in AI tooling that is going to help the SaaS companies add value for their customers.
Right.
And create a level of additional stickiness that actually makes them hyper relevant and actually massively grows the value for their customers. So that's things like we're talking about through whether it be kind of agentic booking, where that's a fairly simple use case, but you can suddenly create revenue driving use cases where, okay, someone's not turned up to appointments recently. Right now, I'm going to proactively go out and contact those customers and see if they want a follow up appointment. Which is revenue driving, for example. And if you give the SaaS company those tools, that helps them drive revenue and value for their customers. Similarly,
absolutely. And Matt, is your target segment, is it really just SaaS companies that are working in the particular segments, or are you going straight to merchants that are, say, practices in the target segment, or is it both?
So there's a slight balance there, because obviously our customers are these kind of clinical settings.
Yes.
And, we're trying to avoid trying to cannibalize the same.
So you're kind of partnering. You're doing that integration with these, say, SaaS providers that are working in that ecosystem, and then you're trying to help them with payments and various kind of financial infrastructure that can help them add more value to their clients, which are these kind of medical practices or um, uh, is that
Yeah, yes, exactly. Our real aim is to create massive stickiness for the merchants. Now, that's not always a SaaS company. As I said, we've got other partnerships where
yes,
our kind of partners aren't a SaaS platform, but they provide services for the for the end merchant.
yeah,
So it doesn't have to be software, but it's generally where payment flows are occurring
yeah,
through or
yes,
via that party. So
excellent.
yes, exactly. That's our go to market strategy is kind of entirely partner led.
Super. And Matt, can you tell me then what are your plans for the year ahead, or the next 24 months, and what are the biggest challenges that you're facing with delivering to your plans?
Yeah, I think the year ahead is extremely exciting. We've got a number of customers who, as in partner sort of platform customers,
Yeah.
who are lined up for the rest of the year, which is great. So we're going to sort of deliver that. 2026 is all about scaling. So unlocking the payouts capability lets us into kind of other market opportunities, which is massive. We are also targeting kind of some e-commerce providers. So we've got a series of plugins for our checkouts that help those companies integrate
Yes.
with us, in a no code, low code sort of super
Excellent.
fast way.
Yep.
So that opens up another market as well. But yeah, no, I think broadly our predominant focus is growing those SaaS platform partnerships and looking at some of the value of AI in that in what we can do with them. So that's what we're kind of investing sort of pretty heavily in
Excellent.
as well.
Excellent. And what are you finding are the best tools and platform that you're using in AI? Are you using like the Langcore and that kind of stuff, or N8N, or what are you finding is helpful in your vision?
So, well, we're using a sort of a number of kind of large language models, and so they all have kind of pluses and minuses. And
Yeah.
so, having relying on one is
No.
uh,
Yeah.
certainly not super helpful. Whether it be called OpenAI, Grok with a Q rather than a K, from
Yes.
a commercial point of view. We're kind of using a bit of a strategy across a few different ones. I
Yeah.
think the key that we're finding is how you curate the pipelines behind those in an efficient way. I think
Yes.
what's really exciting is that we you don't necessarily have to have huge engineering teams anymore, right?
Yeah.
And this is what's
Yeah.
going to be massively disruptive across development in general, right?
Yes.
Because really, you're kind of going, instead of it being traditionally you've done a load of coding, doing all your rules, all your sort of your processes. We're able to sort of string all these tools together with very small elements of code in a very robust way,
Yes.
and go pretty quickly. So yeah, there's I'm just trying to think if there's any particular kind of tools that I'm finding. I'll have to talk to my team.
Yeah.
Um,
Yeah. Yeah. Yeah.
come back
Exactly.
to you. But no, I think that's the thing that's really exciting. I mean, you asked about sort of the biggest challenge. Um,
Yes.
we've created a bit of a for our own back in that we've got such a incredibly strong dev team
Yes.
in our company that finding the top talent that we can globally
Yes.
takes just a very long time. As a founder, my sort of biggest frustration is that we're shipping an unbelievable amount in terms of versus anything I've ever done in my career,
Yeah.
which I'm
It's
incredibly
it's
proud of.
amazing what you can achieve now.
Absolutely, but we're restricted by working with only the best people we can find, and getting them in fast enough in order to match our scaling ambition is probably the biggest challenge we've got. But that's where
It can be
you know,
a challenge, all right. Yes.
but
But
this is
I
where the
think
AI thing helps. Sorry.
Yeah, I think having that very, very strong core is excellent. But even if you can build out that core, maybe you don't need them all to be 10xers or 100xers. But if you
I
can
agree.
build it out, and I think like what we see as well is that you can have very good people, but you need to make sure that you've kind of, that you're filling the any skills gaps that might be emerging, that you're looking for them, and then you're looking to assist people so that they can be able to be leveraging the new technologies that are coming out. And
Yeah.
I think there's a big difference between doing that well and doing it badly. For example, nowadays, just to create a front-end prototype, anybody with a keyboard is able to do that now. And it can give you an awful lot of options, but getting it from there into being something that's reliable, that's secure, that's scalable, and that's useful and doing what it's meant to be doing, that's difficult. You do need humans in the loop
I,
all
I
all all steps of the way.
No, absolutely. And I think there's a slightly sort of careful with your wishful thing. I mean, the amazing thing now is that I can run a company and at the same time be creating prototypes that explain my kind of vision, explain the product I'm trying to build in such a vivid way that this just saves, I don't need a UX designer. I don't need to write loads of PowerPoint slides. I don't need to write loads of prod specs. And those are useful things and robust things. But, I've in a few hours created a small prototype of features that we are going to release in the platform. Which is, that's crazy. In a couple of years ago,
it is.
You can do that. But exactly as you say, and there's horror stories left, right, and center about people who have just vibe coded something, deployed it to production, and then there's unbelievable PII data breaches and God. So, dear God, don't do that. The challenge is taking something like that and then how do you make that robust? How do you make it secure? Exactly as you say, those human interaction points are absolutely vital. And how are you responding to some of those challenges? Because when I speak to businesses like yours, I've had a conversation with someone who says, if we don't radically change our whole models from it's bums on seats costing X to a thinking, product, acceleration, value in thought and speed point of view, then you're going to exist. I mean, how are you?
Well, exactly. Well, we're going through a transformation ourselves. So like what we see in the marketplace is for the fintechs, for the startups like yourself, the newest startups are AI native ones, and they're able to do an awful lot. But by the same token, the VC model is a bit broken, and the VCs are wanting to see that those early stage fintechs have got an MVP, they've got some customers, some revenue streams before they're ready to be considered for seed round. So that, so one of the things that we can do in that segment is to help them to get to that point faster. Oftentimes as well, the early stage startups may have some skills and capabilities, but they may not have all the ones that they need. So we're transforming how we operate as a services company on every dimension so that we can be responding to the different needs at that stage. Now, what we're seeing with the scaled up fintechs is that these companies are ones that have revenues, they have customers, they've got a brand, they've got a product, but they've got the risk, though, that people that intimately know their market may come along with AI native platforms and go after that business and have got capabilities that aren't there, different cost bases or different business models, whatever. So I think for those scaled up fintechs, of which our clients or larger clients are included, I think part of it is to have a strategic advisory function in the company. We've added that on, even though there would have always been an element of that, but we've called it out consciously. And it's try and get some time and headspace for those founders to step back from the business as usual and I think those founders are doing that anyway, and then to look at what is the path they want to go. Then I think they need to go, what is the message for the organization? Because they have teams, and then they need to look at what are the skills gaps. But I think the message is very, very important, because if people are worried in their organization, their jobs may be at threat, they may not buy into it. So
Yeah.
I think like the message that we have in Keeper Solutions is that yes, we're going through a transformation because we have to be able to transform the services that we're offering. So we've set up an AI lab, and an awful lot of the cutting edge conversations we're having are circulating around that. That you have to have a positive message, say this is about value, scale, productivity, and relevance and competitiveness. And it's not about cutting people out through cost cutting through robots, but it's about enabling people. It's about automating processes, and it's about So I think with a positive message, you can buy people in and say we can actually scale this organization without necessarily scaling the team as much as we would have done in the past. And so we're in the process of actually creating a template for what tech services companies can evolve into in the post-agentic economy. That's our mission, our objective. So we're trying to stay relevant and transform through that. Yeah.
No, that's really exciting to hear. I think that is the one area when it comes to the AI sort of revolution, I think is possibly overhyped. This idea that everyone's going to be out of a job because of this efficiency. I mean, robotics has been around for so long.
Yes.
People have made
There's still
lots
people
of
in
parts
manufacturing.
based on that,
Yep.
right? But also, I worked for a large insurance firm, and we did a huge kind of robotics automation process that jobs were cut as a result of it.
Yeah.
But it wasn't this kind of apocalyptic change. And similarly, Fintech exists because traditional technology and banking establishments and finance establishments are so inefficient and so bloated.
Yeah, exactly.
There's people working in these companies who are not hugely churning out loads of value today. The idea that suddenly, because AI means that this person isn't needed, that they will suddenly lose a job is not necessarily accurate.
Yeah, no, exactly. There's a lot of breaks, and we didn't even get to regulation, but I think that'll have to be another day's pod at this stage. But so well done there for turning the guns back on me and putting in a super questions. Matt, can you tell me, so if people are looking to get hold of you, where will they find you?
Fantastic. So yes, I'm Matt Gilbert at Synapto. So Matt at synaptopay.com.
How's that spelled?
It's synaptopay.com.
Great.
And you can find me on LinkedIn or through our website on synaptopay.com.
Brilliant. Thanks very much. It's been fascinating speaking with you, Matt.
Thank you, Stephen. Real pleasure. Thanks for having me.